From the reading, S&P 500 snapshot, a fractional loss, second narrowest intraday range of 2016. Markets today were mildly depressed mood. Asian indices were mixed, but gold finished lower. Crude oil declined and European indices lost ground. The benchmark S&P 500 wiggled through the day between its 0.016 high and its negative 0.25% low, the second narrowest intraday trading range of the year. The index finished with a fractional loss of 0.21%. There was no economic news to stir the trade, so the popular financial press explains today's inaction as a lull and wait for further signals from the Fed on the rate hike. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights to current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 9:15 p.m. Mountain Time, and I'm recording this in preparation for the market day of tomorrow, Tuesday, May the 24th, 2016. We are indeed in Mountain Time. We are in the midst of our travels from Chicago, our old home, to our new home in the Rockies of Montana, and should arrive there sometime tomorrow. I have to share with you, as we crossed over the border into Montana earlier today, right as we crossed the border, the radio was playing Wild Thing, You Make My Heart Sing, and I had to laugh out loud. It was just a perfect vista, perfect view, perfect timing, and as a religion professor I once had many years ago said, it's a sign, and we certainly thought it was. But bottom line, this recording is all about educational purposes only, and only you are responsible for the investing or trading decisions that you make. Let's go ahead and dive into the morning report. And, of course, no futures from the overnight report since we're doing this the night before. But Tuesday, in the macroeconomic report, you got the new home sales and Richmond manufacturing. And then also for U.S. on Wednesday, and looking ahead, we have crude oil inventories. Really, the only thing of note, there's goods trade balance. That's pre-market. And that looks to be about it. So, again, pretty quiet action for Tuesday and Wednesday in terms of U.S. macroeconomic reports of note. In terms of current volatility, as you got from one of the authors in the reading here, it's pretty quiet. And indeed, short-term VIX of 13.60, skew below the warning stage. IV percentile, only a 16 on the S&P, 19 on the Russell, 13 on the NASDAQ, and 11 on the Dow. These are very, very low levels, and we've been talking about that quite a bit lately, so that shouldn't be too much of a surprise to the regular followers. In terms of closing action from a standard deviation move today, there were no indices that put in more than a one standard deviation move. So relatively quiet here in the last four sessions. We've had a couple indices on Friday that put in a standard deviation move, but other than that, the last four trading sessions have all been relatively quiet after having a cluster of some 5 out of 6 days in which you were having standard deviation moves virtually every single day and flip-flopping back and forth. And indeed, that flip-flopping back and forth continues to be the story. Let's go ahead and go to the charts. Here's the S&P futures. And as we've made this huge run, everything since it got up to this top has been lower lows, lower highs, and we continue to do that. Now, this action that we've gone through in the last couple days, seems to just be going sideways again, and it's doing it in a very interesting place, right at the top of the cloud. So there's some that are suggesting that we should be making new highs, and then others thinking that we're going to fire off this head and shoulders pattern. We talked a little bit about that this morning. There really is no resolution after today's action. A bit of a weak day, and you see the candle so far today hasn't done anything. Of course, we're still very early into the overnight session at the time of this recording. But where you had this little head fake down here triggering potentially that head and shoulders pattern, into a breakdown to the bottom side, was immediately reversed. So we just had a false breakout of that pattern, and really nothing has been accomplished either way since. So we are in, well, whether the financial media wants to call it a waiting pattern for the Fed or something else. Bottom line is that our traders didn't take any kind of significant action today. In terms of the Dow, let's get over there. Dow looks very much like the S&P still, also playing near the top of the cloud. It's actually in the cloud a little bit, so by definition neutral. And I'm not going to spend a lot of time on the charts today because they really didn't tell us anything new to speak of today. Nothing really here on the NASDAQ. It still continues to chew around in this kind of sideways consolidation pattern in the middle of the cloud. So that's just about as neutral as you can get. Now, we're going to go to the daily report here in just a second. You're going to see that there was some developing information on the NASDAQ. Here's the Russell. Again, just more of this sideways pattern. Again, another index right above the cloud. So either just fighting to stay above the cloud and its support or in the cloud itself. None of these indices are doing anything right now to tell you anything terribly bullish. Go ahead and take a look at volatility. Any new news there? No, just been kind of ebbing back ever since that bit of a pop earlier last week. And then I'll take a quick look at regular VIX. Nothing there. It's in the cloud, in fact, and up against quite a bit of resistance. In terms of bonds, well, can't get too excited about bonds here. I wouldn't call this, either breakdown or break up. It's just, it could be, I suppose you could say, a bit of a, this gap down with the Sunday night into Monday session. And the bulls didn't take it all back by any measure. And so far, today's action isn't giving us enough of an indication of where that might go. Crude oil, a little bit of a weak day, but nothing of note. It's still in a very, very bullish pattern, both short and intermediate term. And then gold. Wow, gold has just got to be driving people crazy. We do have a swing trade on gold that is bullish, and it's definitely taking a lot longer to do anything of significance. It's basically retraced the entire last breakout and come all the way back to where that started its move. So that's starting to, really kind of call into question this goal. But we've seen this before where it breaks out, then goes sideways, then breaks out, and then goes sideways. It's been a very, very slow developing move with gold. Let's see here. I don't think there's anything else worth looking at the charts with today. Main thing is just keep an eye on the S&P and look for a confirmed breakdown of that head and shoulders pattern. If you see that, then that's probably going to lead to some more significant movement, which might be tradable at least on the short term. The other alternative we're looking at is a sideways pattern, and very difficult to do swing trading unless you take a very, very small, very short trading time frame. And then, of course, the third option that we talked about yesterday was this, that it could go back to all-time highs. Right now, I still think that one's probably the least likely scenario. Let's go on to the daily report. And we've seen some more deterioration here today. We still have what's not changed. Market trend intermediate term phase opinion phase 5, the in short term, the break in diagonal or horizontal support. In this case, we actually had both the diagonal and the horizontal support breakdown. In terms of our three market timing signals, they're all three showing very poor strength for the bulls and really call into caution any kind of bullish posture at all. IBD has uptrend under pressure, so its first level of warning. GMI index, awful 0 out of 6 and a full-out sell signal since 5-4. That author staying in mostly in cash. The decision points, that's where we had the change for today. And notably on the NASDAQ, we have a new long-term bear signal. So if you add all this up, short term is at best neutral and probably should be considered bearish in that it's neutral to bearish across all these different indices. Intermediate term has had some deterioration, and the NASDAQ went neutral on a trend model signal. And then in the long term, we now have what was a mix starting to go and decidedly into a bearish mode. So we now have 1, 2, 3, 4, 5 out of 8 now are signaling to the bear side. So this continues to slowly but surely deteriorate across our signals, and overall consensus here continues to be a market in transition. We're not yet ready to say that this is a setup for a bear market. It's not. It's still a market in transition, and yet at the same time it continues to slowly but surely deteriorate in these signals, and really very, very little for the bulls to be able to point to and be able to say something that that this is a healthy market. It's not a healthy market. No way. In terms of position sizing opinions, both at the same positions that they were yesterday, 50% and 75%. Intermediate term market posture. We've talked about this must be 3 or 4 times here in the last 2 weeks where we've had a first or even a second day weak bull signal on the intermediate term market posture, justifying failure in a quick and steady fashion. And once again, that first day bull, weak bull, failed after 1 day, and now we're all the way back to strong bear on all 4 of these indices. So that is not a great sign. But also, let's not get too ahead of ourselves. Either strong bear or weak bull, this market doesn't seem to hold on to either stance very long. And if you want to be a bear, you have to say that you're not getting any follow through either. If you want to be a bull, you certainly aren't being rewarded for your holdings. So it's one of those things where you've got to be careful not to overplay the hand either side, because until we have some confirmed break out of these ranges, all you're doing is playing an inside game. In terms of the hedge warning status, it's still at level 2, the red light. It is not acceptable to initiate new short-term or intermediate-term bullish trades if you are a novice trader. Market conditions are decidedly weaker than would be called for with that. Option income strategies, the VIX is inside the acceptable window, but given all the other warnings, significant defensiveness would certainly be our suggestion in the initiation of new positions. So kind of be ready for those larger than expected perhaps moves with Vega and Delta. Should this market break down, it could happen very, very quickly. You're right on the threshold of that breakdown from that head and shoulders pattern. Covered call strategies, really poor conditions right now to initiate a new covered call strategy. If you're managing one that you're already in, the suggestion is a 1-to-1 ratio of in the money and out of the money strikes. And also, in terms of your portfolio, you'd like to probably be pretty defensive there and have a 1-to-1 ratio of low beta and high beta positions. In terms of put selling, that probably is the first strategy that you might start to leg into, especially in those stocks that you'd like to build a position on, should the market start to show, formations of a bottoming pattern. But that's not yet happened. So I would strongly suggest being patient and really only kind of play where individual stocks have given you something that's particularly attractive, they've broken down close to support, perhaps you want to do a smaller than normal position, be able to scale into that as it continues to firm up and show you more of what it wants to do. But many of these, you could probably, for example, with put selling, if we do break down, you're going to have a great opportunity to do some put selling from a better location and pretty quick order. In terms of the various individual warnings, not a lot of changes here. We continue to see this distribution day count, holding at 9 and 7, and no change in the key intermarket risk aversion indicators, still at 3 on and 2 off, but rolling up. So that's been one of those signs that the bulls might be gathering some power. Very, very neutral on the sentiment areas. Here are 54 on the Fear and Greed Index. In terms of the sector specific, we continue to see slowly but surely a little bit more red. Very, very few, improving their condition. Mostly today was about, some deterioration, though subtle. In terms of the percent change today, you see only one, materials, was holding up with a positive day, and it for the week is just barely positive, along with financials, and then everybody else is in the red for the 5-day time frame. Also look at the 1 month now. So you have 1 day, 5-day, and 1 month time frames all negative, and in almost every single case, and certainly not even a single sector is showing any kind of consistency in terms of being green across those first 3 time frames. So not terribly good. I did want to mention we've had a couple changes in terms of ETS and their intermediate term market postures. Let's see here. There was, here it is, the technology RYT. It went to intermediate term market posture bullish just on Friday. So do be aware of that change right there on that table. Okay, that's probably enough for today. Let's go ahead and roll down. And one of the things to keep in mind is that you might want to make sure that you are set up to get the YouTube video announcements. I'm getting ready to probably go most of the time to doing this production in the evenings. If you'd like to get notice when this content is posted, then you will want to be a regular subscriber to the YouTube channel. You just go to this hyperlink right here and then hit the little red button that says subscribe, and that'll get you set up to where you'll receive notice from YouTube when I post new content. This is free. It's called a subscription because you're basically opting in to notice, but there is no cost associated with that. Also on YouTube, be aware that you can use the special gear settings to make sure that you're seeing this in resolution that is high def, as well as also managing your playback speed. Both very, very helpful things to do, whether you're listening to this in the evening before you go to bed or early in the morning as you prepare for your trading day. You take that 20-minute video and make it about 13. So I'll scroll through the rest of this. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. And in the meantime, always be aware that there's a full set of disclosures at this hyperlink at the bottom. See you back here for the Wednesday market preview next. And in the meantime, good trading.